Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's show, I'm joined by Farhad Abasov, who's the chairman of the Millennial Potash, a listed miner who are advancing the Banio Potash Project in Gabon, West Africa. A large, low-cost potash deposit strategically located on the Atlantic coast. Farhad is an experienced mining executive with over $3 billion in deals and exits. And we're going to dig deep into the real impact of China's production drop, the rise of Africa's Atlantic potash corridor, and how Millennial just delivered a 275% jump in measured and indicated resources. Farhad breaks down what 100 plus meters of cumulative potash thickness means for mining or solution mining, how far the system could extend beyond the 5% drilled area, and the toughest technical challenges by ERCOSPLAN. We also look at how the USDFC-funded feasibility evolves with the new data and what risks have now been de-risked. And what this means for future supply in Brazil, the US and Africa. And then we're going to discuss leadership and what he believes how successful he's been in the past and what he may be doing differently this time round. So let's get this podcast underway, and let's welcome Farhad. Farhad, how are you doing? Welcome to the podcast.
Hi, Rob. Thank you very much. It's good to be here, and thank you for the invite.
No worries. As we always start these podcasts off, just wonder if you can just tell us a little bit about yourself. As I mentioned, you've been in the industry for a while now, so I just wonder if you can just run us through your career, how your career has moved along, maybe from early days when you got into the mining industry, sort of up to present day. So I'll hand it over to you.
Sure, Rob. Look, I've been in this business for almost 20 years now. And interestingly, I've been together with the same team actually for almost 18 years, which is very rare, Rob, in this business where you stay with the same team for a very long time. So we've been doing quite a few projects in the last, a decade and a half. But it all started with a uranium project. I joined a junior uranium company called Energy Metals many years ago. And the project had, the company had uranium projects in Canada and the U.S. It was dual listed in Toronto and in New York. And that was the first major mining project for me. And that was a very successful one. One of the projects in the U.S. got built. And then eventually the company was sold for $1.8 billion. And then basically with the same team, we started a potash company in Saskatchewan in Canada, which we also developed and sold to a German company called Kalium Salz, which, by the way, built that project, now currently operates a solution mine in Saskatchewan, producing over 2 million tons of potash per year. And then we went on to another potash project in Ethiopia with the exact same team, and we brought in large strategic investors into that company. International Finance Corporation was a big equity holder, a large private equity fund out of Boston, Massachusetts. And in the end, we sold it to an Israeli company called ICL, a large potash producer out of Israel. And the most recent project we had together was a company called Millennial, in other words, also Millennial, but Millennial Lithium. And that was a lithium project in the Salta province of Argentina. And that one, we also brought in a strategic investor from China this time. And we ended up selling that company in early 2022. And we had a bidding war for it, Rob. We had Ganfeng Lithium and CATL from China bidding for it. In the end, Lithium Americas out of Canada outbid them, and we ended up selling the company to them. So that's a brief kind of history of what we've done in the last few years. But all of these companies were publicly listed. We've done some projects privately as well. But this is basically what we've been doing, and the same business model that we've used throughout all these projects.
Yeah. So I just wonder if you can just tell us about Millennial Potash, if you can just give us a snapshot of the company.
Yes, Rob, but we started with Millennial Potash about 2.5 years ago. After we had sold Millennial Lithium, we started looking for an interesting project in specific commodities. Potash was one of them. We usually look at supply-demand dynamic of these commodities going forward 3 to 5 years in order to understand whether there will be an interesting situation, whether there will be supply constraint or the sudden growth on the demand side or the geopolitical event that may be disruptive. And potash was on our map as well, on our list of projects. And we found this project in Gabon, and it had been explored in the past, and that's what we like. We want to get involved only with the projects that have seen historical exploration, and in a jurisdiction that is acceptable to us. And Gabon was one of those jurisdictions. When we found this project, we did a lot of due diligence. We did deep dive, not only on the project, but also in the country. We flew there. We did quite a bit of research into the operating environment, into permitting environment, into the whole thing. And we decided that this was a project that we could actually take on, and we saw tremendous upside potential in the deposit itself. So since then, we have drilled, we've proven a very large resource. We have done a preliminary economic assessment that shows that this is going to be one of the most competitive projects out there. And this is actually in a jurisdiction that is very supportive of further potash development of this project, and not only with permitting support, but also with infrastructure buildup. And we'll talk about that in more detail during this conversation, Rob.
Yeah. As I mentioned in the introduction, China's production drop is obviously real. What is the knock-on effect within the industry because of the production drop?
So look, yes, we have seen those reports, Rob. So the just to give our viewers, our listeners, insight into the Chinese supply-demand dynamics. So China is the largest user of potash today, 15 million tons of potash per year. About 5 million comes from their domestic production from Western provinces in China, and they import the remaining 10 million tons. So what we have seen recently was the drop of about 15% in production coming out of their Qinghai province. Now, obviously, we don't know exactly why this has happened in 1 year. So there could be some structural changes. There could be some serious depletion of grade in these salt lakes being operated by different companies in China. Or it could be just the climate. In other words, it could be just short-term weather patterns that affected it. So we'll see whether this is more long-term or short-term. But immediately that means that China will need to replace that, or to find the substitution for the lost production that comes from China itself. So that is usually a good sign. That means that if it is structural issue, then they will have to start looking for a serious substitution going forward on a long-term basis. And again, we think that bodes well for projects like ours, because we're fortuitously, located on the western coast of Africa, right on the Atlantic coast. So we can actually deliver this product in all directions at very competitive cost, meaning obviously Africa itself, Brazil, eastern seaboard of the U.S., India, and China. So we think overall, this again, it shows that there's a lot of new demand for projects like ours.
Yeah. Africa's Atlantic corridor is rapidly growing. What does that actually look like on the ground?
So, Rob, I'm glad you asked that question, because we've seen tremendous activity in Gabon proper, not only around our project, not only around the infrastructure for our project, but also overall in terms of interest in different industries within Gabon, and obviously in some other West African countries too. But let me focus perhaps on what's going on with our project, and specifically with infrastructure, because obviously, our project is going to be one of the large potash producers, and for that, we need significant infrastructure buildup. And the government has been very supportive, and they've been developing it along the Atlantic coast in the last couple of years since we got involved with this project. And we see quite a bit of interest, not only from the government itself, but also from large foreign investors. Specifically, we see a port being developed about 50 kilometers away from our project, and that is being developed by actually international investors. And the first phase of that port was already completed earlier this year, and the The remaining 2 phases will be done in the next couple of years. So that is a very, very important development for us. And there's also another large deep water seaport that the government is planning to develop, also not too far from us, about 60 kilometers away. And again, that project, that port is being developed in consortium with some other large international financiers and developers and potential operators. So this in addition to power infrastructure, including extension of natural gas pipeline to this port site and so forth. So that shows the importance of this area. And remember also we got, and we'll talk about it later on, but we also got investment from USDFC, United States Development Finance Corporation. Although the investment is directly in our potash project, but we think down the road, there will be significant interest coming from the U.S. in infrastructure development of this part of Gabon.
Yeah, the project's resource has jumped 275% in measured and indicated. What unlocked that scale from obviously your studies?
So this was a major milestone for us, Rob, because last year when we drilled a couple of holes, we intersected very thick potash horizons, about 70 meters thick, and we could report 1.7 billion tons of indicated and inferred resource. That was in 2024. This year we continued with stage 2 drilling, and those 2 drill holes that we sank earlier this year, they intersected even thicker potash. And again, we'll go into the detail later on. And we knew that obviously, when we upgrade or when we actually revise our technical resource estimate, the resource estimate will be obviously much larger than last year. But we did not expect that it would go up this much. In other words, by 275% just on M&I. If you look at measured, indicated, and inferred, we basically took the resource from 1.7 billion tons all the way to over 6 billion tons. So this is an immense increase in the resource size. And it's not just the resource size, Rob, it's also a tremendous increase in the resource confidence. Last year, we had no measured resource. This year, we have almost 650 million tons of measured resource. So that shows a huge potential here. It's already a very large resource with very thick potash horizons, and it only covers about 5% of the property. So you can only imagine the upside potential from here.
You've now confirmed more than 100 meters of cumulative potash thickness across multiple holes. What does that mean for real-world solution mining?
Rob, it is very important to note that this is going to be one of the thickest potash deposits in the world. So if you look at major potash basins in the world, such as Saskatchewan in Canada or Urals in Russia, you will see that the maximum they get up to in terms of potash thickness is 20-25 meters. In our case, we have intersected 70 meters of potash horizon last year, which was already extremely thick, but this year we increased that thickness by another 50%. So one of the holes intersected 100 meters, the other one was 112 meters at the same KCl grade. So that means that, as we move south with our drill program, the potash thickness actually is getting better and better. Now, 70 meters was already extremely thick, but now we're looking at 100 meters and above that. So that translates into much lower cost structure. Now, remember, we're planning to do solution mining operation here. So with solution mining is well-known, well-tested methodology. There are 3 major solution mining operations in Canada, 1 in Germany. So it's again a well-proven method, and our team is quite familiar with solution mining because our last 2 potash projects were also amenable to solution mining. Now we like solution mining because it keeps your costs down, and it has minimal environmental impact. But in our particular case here, not only will those 2 be true, but also we'll have even lower costs than comparable solution mining operations because of thicker potash horizons. Because now we'll be able to create much larger caverns underground, and that will keep both our capex, sustaining capex, and operating costs to the minimum, basically. Because again, the larger the cavern, the better your cost structure, because you don't have to replenish these caverns on an annual basis. In our case, we can have 10, 15 of these large caverns operating for about a decade without any need for replenishment. So that's a huge advantage to have. In addition to other things, of course, the fact that we're on the coast and so forth. But the thickness of potash is critical in this case, as far as solution mining is concerned.
The mineralisation still covers only about 5% of the actual project. How far could the actual system actually extend to from your estimations?
So, Rob, we have 4 holes that we've drilled ourselves. We also have cores from the exploration campaign dating back to 2017, 2018. We also have the data from hydrocarbon wells dating back to the 1970s, in addition to seismic data. So we have very good understanding of the southern part of the property. So we have pretty high confidence that the strike line from where we are at now, meaning where we've recently drilled, all the way to the southern tip of the property, that's probably the whole area. The whole strike line is probably a potash deposit. In other words, it actually is quite continuous, and it probably links down all the way to the border with the Republic of Congo. And the reason for that is, again, we could see that hydrocarbon wells drilled in the 1970s, they actually indicated very thick potash horizons at that point. So almost, the indications were about 200 meters thick. And of course, from what we have been drilling, we can see that as we move south, as I mentioned earlier, the thickness of potash actually gets better, meaning that the horizons are getting thicker. So we think, at least in the southern part of this property, and our property area is quite large, over 1,200 square kilometers, we think that, mineralization actually is quite continuous. As I said, it probably goes for another 20 kilometers southward. So it's hard, of course, today to quantify how much that will be, but we think that based on what we've seen so far, it's going to be much larger than just 6 billion tons.
ERCOSPLAN is one of the strictest potash groups in the industry. What was the hardest technical issue they challenged you on?
So ERCOSPLAN out of Germany is a well-known potash consulting group that has been around since, I think, the 40s and 50s. So they have developed, very famous large potash mines in Germany. They know a lot of different deposits worldwide. We've known them for many years. We have used them in the past, both in Saskatchewan and in Ethiopia. And the reason we got them involved with this project was, again, their tremendous experience, but most importantly, their immediate knowledge of this West African potash deposit, because they have worked in this part of the world in the past, so they know this deposit extremely well. To the point where they could actually predict when we're going to intersect what potash horizon. So they know the granularity of this potash deposit. Now, at the same time, as you mentioned, Rob, they're very, very strict, and we like their disciplined approach to this. For example, last year when we drilled 2 holes, we did not get full kind of coverage of those holes, meaning that the radius or radii that they used, that were actually not that as big as they should be, because quite a bit of it was going over a lagoon. So obviously that was not, the area that covered lagoon was not included in our estimation or in the resource estimate. But at the same time, even the radius was shorter because they needed more holes, which we did obviously earlier this year. So their approach is, again, as I said, is quite disciplined and strict, and we like that because that also allows us to be as conservative as possible. So the numbers that we always present, we know that they're probably on the conservative side. So the 6 billion is probably on the conservative side. Again, just like 1.7 billion tons were on the conservative side last year. But that also gives us a lot more confidence in the resource. And because a lot of potential strategic investors, as well as potential M&A parties, know that ERCOSPLAN is quite conservative in their approach, I think it actually works to our advantage. Now, I think in this particular case, again, they were quite conservative. You would see that, we've shown actually the map with the radius that has been used. So it's quite conservative for the calculation. But again, I think, it shows that even with this type of a conservative approach, we still have a very large resource. So that I think, it works very well for us, Rob, going forward.
Your feasibility study is being funded by the USDFC. How does this updated MRE change the scope of that work?
So, Rob, that's a very good question. So earlier this year, we signed a strategic partnership agreement with U.S. Development Finance Corporation. So DFC is a federal agency of the U.S. government that has a mandate to invest in large industrial projects outside of the U.S. So obviously our potash project is one of those large industrial projects in a country that is very friendly with the U.S. And DFC did a very long due diligence on this project. And earlier this year, actually last July, we signed this agreement in Washington, D.C. And the Gabonese president was in attendance as well. So the agreement actually calls for a couple of things. One is they provide non-dilutive capital to be spent specifically on our feasibility study. In other words, it is earmarked just for feasibility study, and it is non-dilutive because it's not equity, it's not loan, it's basically matching funds, it's grant money specifically for our feasibility study. So as we spend on our feasibility study, they will be matching it. So it's up to $3 million US. It may potentially go up to $5 million US. But in addition to that, DFC also wants to actually fund construction of this project. So they wanted the right of first refusal to lead project financing for our construction, and we provided that ROFR to them. So for us, I think what will be important in the next few weeks and months will be getting clarity on how we're going to go about project financing for this project. Now, in terms of the size of production size, when we did the PEA last year, we looked at 800,000 tons a year of production, and going forward during feasibility study, we'll probably look at 800,000 tons. And we'll look at the larger scale as well. We haven't decided how large that scale is going to be, but probably double that, maybe even more than that. We think that with the current resource on hand, we will be able to actually produce a lot more than 800,000 tons. Frankly, we knew that last year as well, but we just wanted to keep it reasonable and manageable. And at this point, we think we will be able to actually look at larger scale because the resource shows that it's large. And it will obviously enable us to do that. But at the same time, with USDFC's involvement, we think that if, for example, we go through that route, meaning we go down the route of actually building a larger production scale, then we'll be able to fund it as well.
Investors always want the same thing. Tell me the de-risking of a project. What does this MRE remove from the risk profile?
So that's a very important thing we'll look at ourselves all the time, Rob. So for us, there are a few risks involved with this project. I mean, the biggest one, of course, was how big and how strong the resource itself is going to be, the deposit was going to be. And so we think that, the drilling that took place last year, and of course the drilling this year, and with the culminating in this MRE upgrade, removes a lot of that technical risk, meaning that now we know that the resource is large, it's capable of producing at a significant scale. It could be world-class in terms of both production scale and, of course, the resource quality and quantity itself. So I think that risk, meaning technical risk or resource risk, has been significantly mitigated. We still need to do some work, hence we're going to be doing feasibility study. We'll be drilling a bit more as well, going south, just to show the continuity and uniformity of this deposit. But we think substantial technical risk has already been removed. There's still some other risks, of course, as we mentioned, infrastructure buildup and the financing and so forth. But we're working on those as well because we think that, again, both of those risks are being mitigated or reduced substantially through current infrastructure buildup done by the government and their partners, as well as, of course, USDFC's involvement on the financing side.
Banio is now one of the largest known potash resources in Africa. What's the strategic implication for supply to Brazil, the US, and the African markets?
Rob, we think this is going to have a huge impact on supply, specifically for those three markets that you mentioned, Africa, Brazil, and eastern seaboard of the U.S. If you look at actual current production profiles of different, mines, if you look basically where the supply comes from, it's really not along the Atlantic coast. So 70% of production comes from Canada, Russia, and Belarus, and Canadian production is actually on the West Coast or closer to the West Coast versus the East Coast. The Russian and Belarusian production obviously far away from that part of the world as well. So by having a significant potash producer right on the Atlantic coast of Africa means that we'll have tremendous advantage in terms of shipping costs to Africa, to Brazil, and to the eastern seaboard of the U.S. We'll be able to supply this to India and China if necessary as well. But our main focus right now is on Africa. and Brazil and the U.S. So in Africa, the consumption of potash is about 1.5 to 2 million tons a year. There's no domestic production on the continent. If you look at Brazil, Brazil is the largest importer of potash, 13 million tons, and there's no domestic production either. And in the U.S., there's very little domestic production, and all of potash is imported into the U.S. So we think we'll be able to actually meet quite a big demand or big portion of demand coming from these different regions, and primarily, again, focusing on Africa and then potential Brazil. And of course, with USDFC involvement, we'll probably place some of our product in the US as well.
Infrastructure is usually the untold story. What's been the biggest operational challenge so far for your project?
So, Rob, infrastructure is a real challenge for many projects worldwide, and not only for potash projects, of course, for many mining projects. You may have a fantastic project, but in the middle of nowhere where, the cost of building infrastructure to access your project, it basically is so high that, it makes a project uneconomic. So in our case, we were very fortunate, and this was one of the major parts of our due diligence, that the project is right on the coast. It's very close to the ports, and we knew that the ports were being developed. As I mentioned earlier, so one of the ports is already under construction. The first phase was completed earlier this year, and they will complete the rest of the port in the next couple of years, way before we're ready to start our production. So that is very important. We'll have access to that port, but also even a bigger port is being developed as we speak. Again, the government is the lead on that particular port, and we are involved in talks with potential financiers, potential developers, and operators, because that port will be serving not only us, but also some other large mining projects in that part of Gabon. So we think, again, we're quite fortunate that we do not have the same challenges as many others. Having said that, it's still a risk, meaning that it's still under development, although it is being done, but, until it's done, we're still considered to be a risk. But that risk is being mitigated because, as we speak today, first phase of that port that I mentioned has been completed. We also have power plant that is under construction. That is very important. In addition to that, the government also is extending natural gas pipeline from one of the offshore platforms. So that will obviously help us again. So all these elements are coming together very nicely, and we think all of this should be completed just in time for us to start production in the next 2 to 3 years.
If you look at your career and the successes, you have had over sort of 3 billion in exits. Is there anything you're doing differently this time than what you may have done before?
Rob, we trying to stick with the same business model and with the same disciplined approach to all the projects that we get involved with, meaning we do a lot of due diligence before we take any project under our control. So we did almost 5 months long due diligence on this particular project before we got involved. And the model is very, I would say, simple. It's hard to stick with it. A lot of management teams, a lot of companies jump into different projects depending on where the commodity prices or where that particular subsector is quite hot at that time, etc. Our approach is really taking a long-term view of that particular commodity and then doing deep dive both on the project and in the country, because it is very important to have a supportive environment in that particular country. Otherwise, you may have a great project in the wrong country, then you will be stuck. So I would say that we're following the same playbook as we have in the past, and that is really trying to address all these risks that we talked about in a very disciplined and a very systematic fashion. So in other words, we're doing quite a bit of work on technical side. This MRE, obviously a huge de-risking milestone for us, but at the same time, we brought in USDFC that really de-risks the project from political perspective, in addition to financing. And again, we're working very closely with the government of Gabon to make sure that infrastructure is being built as well. So that's the infrastructure, financing, those are things that are many times are not under our control. So we have to work with multiple partners to make sure that actually that can be tackled and it can be addressed. So if you look at our history, our track record, that's what we've done in the past, Rob. So for example, with our Ethiopian project, we brought in International Finance Corporation. They also invested in the company, so they contributed financially, but at the same time on the political side, that was a major de-risking factor for us. Even with the last project we had with Millennial Lithium, we got involved with lithium when not too many companies or people in general were looking into lithium or were interested in lithium. And there was not a lot of money available for lithium at the time because lithium price was quite low, about $5,000 per ton. But our view on lithium was that there would be quite a bit of squeeze on the supply side, and demand was growing leaps and bounds. We could see that very clearly. So we had to go to China and bring in a Chinese strategic investor. It was a very large solar power company that came in who could actually see the same trend as we did. So those are the things that we do. And here our plan is exactly the same. We're developing this project on what we call dual track basis, Rob. One, want to make sure that we have right partners, both technical and financial partners, to take this all the way to production. But at the same time, want to show a very large project, very large deposit that can actually produce a lot more than we're currently contemplating in order to attract potential M&A party down the road. So I think those two processes go hand in hand. And that's exactly what we're trying to accomplish here as well.
Can you give us an overview of your management style and how you sort of bring project and stakeholders together along in the journey with you?
Rob, it's probably pretty simple in that we basically have the same management. We've had the same management, I should say, for the last 18 years. The same team members. We know each other quite well, and this is basically about a dozen people at the top. And of course, as we go into projects, we build larger teams on the ground, usually local teams. To give you an example, in Argentina, we had 250 people employed. We had only 4 expats. In Ethiopia, we had over 300 people employed. We had only half a dozen expats. So that's our approach. But the key thing about these projects, Rob, is doing a right due diligence, trying to understand exactly all the nuances about the project, not only from technical perspective, but from political and permitting angles as well. And of course, once you take it on, again, trying to make sure that you build your team accordingly, meaning that to make sure that you have right local support, right local, government support, but of course, you build the right team as well and employ right people for that. So that's how we operate. And again, the team has operated in various regions of the world. So we're quite well versed in different parts of the world. So we can operate there. We can easily and quickly build teams in, let's say, in Africa, Latin America, let alone in North America or in Europe, for example. And we're trying to stick with commodities that we know best, Rob, and we're also trying to stick only with jurisdictions where we feel that we can operate. In other words, we will not go into high-risk jurisdictions where the rules of the game or rules of engagement change all the time, where we cannot get enough support from either government or from large multinational institutions. So that's how we operate. So as I've given you quite a few examples, we go in ourselves first. We take these projects public. We'll bring large investors, large strategics into the game as soon as possible, so that we can get their political, technical, and financial support. We'll work very closely with the government. That is key. We want to make sure the government is very cooperative and they're really keen on taking these projects to production. Hence, they provide full support in terms of infrastructure, in terms of permitting assistance, and so forth. And I think, working with the local governments, local population is absolute key to success here as well. So it is a multifaceted process, but we have a very systematic approach, both in terms of finding these projects and then operating them.
And lastly, just wonder if you can give us the short to medium term outlook for Millennial Potash as a business.
Rob, we will have a very busy 2026. 2025 was a bumper year for us in terms of big news, incredible drill hole results. Of course, USDFC's involvement. There was a major de-risking event for us. It was a stamp of approval by a very large institution. And then, of course, we're finishing the year with a very large increase in our MRE. So next year we will start. Well, we will actually start this year. Well, in the next few weeks, we'll announce the start of feasibility study and then environmental and social assessment studies. So those two programs will go forward on parallel tracks for the next few months. In addition to those two programs, we'll actually go ahead with further drilling. So we're planning to drill a couple more holes to show, again, the continued and strength of this deposit going south. In addition to that, we're working also on very strategic angles, specifically on financing. And this includes, again, the conversations with potential off-takers, potential strategic investors coming from fertilizer industry or from mining industry. And of course, if anything happens on those fronts, we'll announce specific results. And we also going to work very closely with USDFC on putting together a financing package for our construction in the next few months as well.
Great. Farhad, really appreciate your time. Thank you for sharing your story and give us an overview and update on your Millennial Potash company and obviously the Banio Potash Project, and obviously sharing what you're looking to achieve. So if our audience wants to reach out to you, if they've got any questions, how can they go about doing that, and what social media platform channels are you on?
Well, I think we're on all socials, Rob, so they can reach out to us through LinkedIn, Twitter, and Instagram and so forth, but also they can email us directly. Our contact information is on our website, so we'll be more than happy to answer all the questions.
Great. Well, wish you all the best for the rest of this year going into 2026. And perhaps you can come on the podcast sometime later in 2026 to give us an update on the Banio Potash Project.
Thank you, Rob. With pleasure. Thanks a lot again.
No worries. Thank you for listening. I hope you enjoyed the episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. We haven't spoken about potash recently, so it'd be good to share this episode to those that you know within the industry to help hopefully educate and take some golden nuggets away from this particular episode. Thank you again for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.